Today, guys, we will talk about why is the US dollar losing its shine. According to CNN, the US dollar decline has gained speed this month as investors pare back their interest rate expectation. The greenback soared to a two-decade high last September, driven by the Fed's aggressive pace of interest hikes. But then came recession fears, the collapse of three regional banks, and worries about congressional infighting and US spending. Now, as inflation continues to cool, the Federal Reserve appears to be nearing the end of its rate hiking cycle. Last week, that helped lead to US dollar index, which tracks the dollar versus the British pound, euro, Swiss francs, Japanese yen, Canadian dollar, and Swedish krona to its lowest level in more than a year. The Fed on Wednesday raised interest rate by a quarter point and hinted at another hike later this year. But it's possible that a second hike never comes and the Fed decides to move on to the next phase of its inflation fight, keeping rates steady until inflation moderates to its 2% target. As the central bank gets closer to possibly finishing its hiking cycle, and other central banks around the world that begin raising rates after the Fed catch up, the greenback is nearing a more sustainable level, some experts say. The dollar lost some of its luster as the only game in its own, said Kathy Jones, chief fixed income strategist at Charles Schwab. Why does that matter? The dollar declines could be a tailwind to some companies' earnings. Last year, an unfavorable exchange rate weighed down the top lines of tech companies, including Salesforce, Microsoft, Apple, which tend to generate much of their revenue overseas. A monster run in tech stocks have driven much of the market gains this year. The dollar decline could the dollar decline could offer some support to tech earnings, further boosting those stocks and in turn the broader rally. But any benefit from a falling dollar to corporate earnings will likely be limited, says Jones. The dollar also likely doesn't have more room to slide, says Seema Shah, chief global strategist at Principal Asset Management, while Japan hinted Friday it could gradually begin to raise rates, sending the yen up against the dollar. The European Central Bank said Thursday it could pause at its next meeting in September. It's not like the Fed is going to be cutting rates, which the other central banks are raising rates. That's fairly unlikely, said Shah. Gold could also benefit. Gold prices have risen over 6% this year, supported by a sliding treasury yield and a decline in the dollar. The precious metal is priced in dollars, making it cheaper for investors outside the US to buy when the greenback value falls. The DOW shifts to snap 30-day rally. The DOW Jones Industrial Average Index fell Thursday, cutting short a historic 30-day streak of gains. Barber and Hammer boost the economy. Barbie and Oppenheimer are adding more fuel to the hot economy. Why? Let's read. The film, both released July 21, have been such mega hits that they seem to be having an impact on consumer spending data, reports my colleague Matt Egan. Bank of America cardholders increased their non-gasoline spending by 1.9% from the year earlier period during the week ending July 22, the bank said Thursday. More specifically, spending in the entertainment category grew while it fell in other areas like home improvement, online electronics, and furniture. Barbie, distributed by CNN owner Warner Bros. Discovery, ranked in $162 million during its debut weekend at the domestic box office. Barbie dominated the box office in the debut weekend, ranking in 162 million at the domestic box office. The film, distributed by CNN owner Warner Bros. Discovery, was the biggest ever debut for female director. Powell said the overall resilience of the economy, coupled with cooling inflation and rebuilding consumer confidence, is a good thing. However, the Fed chair acknowledged that if the economy heats up too much, it could prove problematic for the central bank, or the margin stronger growth could lead over time to higher inflation, and that would require an appropriate response for monetary policy. Powell said, so we will be watching that carefully and seeing how it evolves over time.